Good morning and welcome to another video cast from Hendy Consulting, the specialist management consulting firm for the $125 billion display industry. And today I wanted to let you know where my thinking is on the future of displays. And to be honest, I have mixed thoughts. I mean, we're clearly at the bottom of the cycle. And the question has been raised by a dear friend of mine, is this trough in the cycle now a new reality? Is it something different, or is it the same as every other trough that we've lived through in the many years I've been in the industry? So I joined this industry at 25. I've probably seen 8 cycles, and always what I would have advised people is to hold strong at the bottom of the cycle. It's when the phoenix is born. It's when new display technologies emerge, and that this will turn. And the question is now, is this cycle different? How long will it take to turn? Should we be bullish or bearish about the future of the industry? And how would we know which of the two outcomes is most likely to take place? So anyway, some provocative thoughts for a Friday morning. And the view in my starting point came from my dear friend Paul Gray at Omdia, who's one of the best analysts on the TV side of the house for displays. And his argument goes like this. He goes, the display industry changed, yes, with COVID, but it actually changed earlier than that in 2016 when consumer purchasing patterns in China changed. People started spending less on televisions and less on smartphones, with both businesses being down about a third. So a 20 million unit drop in TV and about 150 million unit drop in smartphones. And yet this wasn't a recession. Consumer confidence remained high. It was just consumers are pushing out the lives of the products they have and spending money on other things, housing costs being one of them. If we compound that, then we have separate stories from Omdia saying that actually for the first time ever recently, the amount of TFT capacity, which has been running at a 22% CAGR in terms of area for 2 decades, actually turned negative. So there's actually less capacity now very recently than there had been the quarter before. And that's actually breakthrough and new. And for me, that was compounded by Ross's gang at DSEC showing their forward-looking capex book at only 4 to 6 billion over the next 3 years. And for context, very recently, those numbers have been running more than 10 quite happily. So this feels like a different environment. Paul also goes on to allude then that, if there is a fundamental reshaping of what China represents to the display industry, then it might also actually be interesting to see how the Chinese government at local or national level does get involved, because while they've got 2 very big chess pieces and then a couple of others in the second tier, there's also some smaller pieces, and one wonders what the Chinese will do with that. There has been government intervention in the past, and actually just to say that's a matter of China is unfair. The Korean government has just called OLED a protected industry, and Taiwan has always had an industrial policy. So saying these Asian countries don't have government involvement would be wrong. They all do have, but to different degrees. So then the question becomes, is this world where he's basically describing a smaller display industry, living within a box was his phrase, and that's the idea I'm going to present through this as a leitmotif. Is that now what our future is, in which case the outlook is pretty bleak, or is there an option for a sort of more expansionist vision? And I was really excited last August by the views of Dr. Chair at SDC, where he really presented a very bullish outlook for the future of SDC in the display industry. Basically, he believes emissives, so OLEDs, micro LEDs, things like that, will be 100 billion of the total, which is a very large piece. And that Samsung will be fully half of that, so they'll be a $50 billion firm. Now, if you think they're at about 25 today, and that there's always price erosion, this is an amazing assumption on the future of his business. And his is based on further OLED growth, further growth in emissives, and further expansion of SDC. So how do we compare the two views? Is one right or is one wrong? Or are there elements of both that we could take into account? And how will we know which is going to be the outcome for the market ahead? So this for me was, I thought of trash compactors and Star Wars immediately. Living in a box, right? What happens in a worldview in displays where everybody's having to live in a marketplace quite a bit smaller than the peak, which I think we ran to 150, 160 billion at the top. And now we're running quite a bit smaller than that. If we're also living in 350 million square meters or lower, how are we going to live within a smaller, maturer display market? Does that just mean hyper competition in a way that we've not had in the past, with technologies really having to crawl at each other cost point for cost point, or what will that mean? And these sorts of things are compounded by this sort of picture, which is capex, including the last big flex OLED cycle, historically being more than 10 billion. Well, now we've got a forward-looking profile, and yes, we're at the bottom of the cycle, so we should expect it, but we've got a much reduced forward-looking capex picture, and this really quite surprised me by its degree, not by that it's happening, but by the fact that it's down to 4 to 7 billion a year here now is a very different environment for the equipment industry to live in. And this is just proving that point, right? So this is a concatenation of Omdia data over a very long period of time. And as you can see, this one very big, large cycle based on Flex OLED beginning 2016, 2017, where at some points there was more than 20 billion being spent on capex in the industry, and so we haven't been down at the levels of 4 to 6 billion for a very long time. So maybe 1998 and 2012, but that's relatively distant history for most of us. And so this was the point I was alluding to from Charles Annis, another good friend of mine, where he's basically talking about this was the first time there was an absolute drop in TFT capacity in the industry against a backdrop of 23% CAGR between over 2 decades. I mean, that's an amazing story. So, companies during COVID debottlenecked and pushed in additional capacity basically to hit that peak. And now post-COVID, there are actually some LCD closures. Samsung has got out of LCD completely. LGD is exiting more slowly, but is so also. We've actually got a decline in total capacity going on, and that's a pretty important fact. So then, what sort of worldview do we have? Because two different people I respect are describing very different futures, and maybe can they even coexist, because Samsung's plan is for Samsung to grow and for emissives to grow, whereas Paul's constrained market outlook just says the total box doesn't get any bigger. And maybe both can happen, but if that's the case, anybody who's not Samsung is going to be in a very difficult state. So, on the constrained end, if the market is simply smaller now for the next period of time, what will happen? Will we see very big pressure in Japan and in Taiwan? Will the smaller pieces in China get bought up? Because there are still pieces that look like M&A opportunities. And whether the local or national level Chinese government will actually help that happen. And in a constrained model, I've been a big believer in the growth of advanced displays. I really believe that high dynamic range and wide color gamut have led to new opportunities. Well, that just means the low end of the range gets crushed even harder. And it means in a constrained view that you've got basically pockets of new equipment opportunity. So maybe you could say it's in mass transfer equipment right now for microLED, or it's in tandem structure, large gen OLED, fine metal mask equipment, which Canon Toki may do well out of. But you've got specific companies getting specific gains amongst a picture where the rest isn't that exciting. Or is the worldview from JS Chair one that we can imagine more generally? Is this just the bottom of a normal cycle, and wide color gamut, high dynamic range, and new technology will drive this back up, and all it is we're sitting at the bottom waiting for it to turn? And this is, I think, a meta level problem for all of us. So, if you start saying, could actually both views be correct? Well, then you've got a constrained total market picture, but Samsung taking off and being explosion in their revenue. And that just means it's very difficult for everyone else, and even perhaps including LGD. The Japanese might feel pain. AUO and Inlux also feel pressure. Of course, the smaller pieces in China feel real pressure. If you've got a totally constrained marketplace, growth at the high end, but then of course the low end is put under real pressure. Or is it just, is Paul's view right that we're in a new market and this is a constrained view, right? We're in the trash compactor. And so then, the strong survive. Those that are backed by government agendas. And, in this worldview, prices are going to be brutal. So, you need to be in the niche high-end opportunities in certain places. Being exposed to OLED is probably better. You'll have pockets of profit in certain places. Of course, the brand companies will do well and consumers will love the new low prices. But, if you're just a large capacity player, then you get crushed. And if you're a smaller player, so perhaps some of the Japanese and the Taiwanese, that really might be a problem. But maybe it is a little more optimistic than that. So maybe in the Samsung view, there are some options for high-end and high, niches of opportunity where there's profit. And or, this is just, it will turn and all boats will rise. But I have to say, I'm in two minds as to what the future will be here. So how will we know? This is a good question, right? How will we know which is the future going to be? Is this 20%, 30% drop in Chinese purchasing in both TV and smartphone fundamental to the business where it's never going to recover? In which case we've got a pretty nasty outlook with low capex and much more competition between technologies, or will this turn? And I think the one that's the most useful thing to know out of all of this is actually the capex order book. I mean, short term, we can watch inventory in the chain, and that's a very useful thing to monitor. But then beyond that, the next thing as a long-term indicator is capex decisions. And those you can actually see coming through, and I think that'll be important. I'm really fascinated to see whether or not we'll actually see some exits and closures now this time, whether it leads to more M&A events at the bottom, which is exactly what you'd expect to happen, or even fundamental bankruptcies of certain businesses in this total outlook. But I think the best leading indicator looking forward will be the capex order book. So we should hopefully see that beginning to turn at some point. And then for some of my customers and people that I talk to, the question for me would be is how does your business cope in either the upside or worse in the constrained market view? Is your business model resilient to that? Do you have enough niches of profit opportunity to be able to survive? And how would a volume business cope with a distinctly negative market outlook? Anyway, these are the thoughts for today on Friday morning, and I hope you found that interesting.